Guys, so this is another backtesting video. However, I am going to make it a lesson on liquidity. So I'm going to do 3 examples, and hopefully by the end of this video you will understand how and what liquidity is, high probability, which ones to use, which ones to take on, and which ones are the easiest to identify. So I'm going to start it off by what I always do. Wow, I'm always starting off the videos with marking out my high as well as marking out my low. This is Euro USD. So I'm going to start it off by marking out my high as well as marking out my low. Alright, so let me just, this is called a high. Okay, so I'm going to make this video easy for you to understand. And hopefully by the end of this video, you will have the knowledge you need to take on supply and demand. Right, so now you can clearly see that I have marked out a high, which is the last high and the last low before price started moving in between the last high and the last low, right? So other than this, price has never broken the low or the high after this high and after this low. So after this low, price never went back down. After this high, price never went back up, right? So this is the part that we call liquidity, because price is not going anywhere. It's moving within a range, right? It's ranging, basically it's ranging. So liquidity is basically a ranging market where buyers and sellers are fighting to take price up and push price down, right? So the most high probability liquidity is the ones that are a ranging market, right? So a ranging market are the ones or the type of liquidity that you want to look for, right? So as you can see here, in between that low and in between this high, price never broke that high or this high again. So price came back down, never broke this low over here. Price turned back around, and now it's starting to play within the level. So the smaller price or the less price start to move, the higher probability trade or the higher probability outcome of a trade you will have, right? So let me show you how to use these kinds of liquidity. And so I've marked out my high, and then I went ahead and marked out my low. Now I am going to mark out the ranging market or the liquidity market. As you can see, liquidity not taken becomes triple S. Right, I hope it's easy to understand. Liquidity not taken becomes S. Let me just get to okay, and then liquidity taken becomes X. So I'll go a bit more into depth about that. However, for now, liquidity taken becomes S and liquidity taken becomes X, right? So what I'm doing here might be a bit hard for someone to understand. However, if I was to mark it out like this, and I was to mark this out like this, you would understand, because that is a pattern. It might be a familiar pattern to you. However, I just tend to mark out the highs and the lows. So now at this point in time, you would look for something like this, and then there, basically the basics of the market or market structure, what you've learned from, I'm sure you've learned it somewhere on YouTube or other video courses that explains patterns, how to use patterns, right? So what you would be looking for is either something like this and then something like this as well, right? So now it looks a bit easier to understand because it's some kind of a pennant or some kind of a flag. However, I just keep it simple and mark out the lows and the highs of the last liquidated low, or let me say liquidated lows is when the liquidity gets taken. For now, I'll just call them the liquidity lows. I'll just go ahead and mark out the last low of the liquidity. Try not to confuse myself too much. Right, so that's the last high of liquidity. And this over here is the last low of liquidity. Right, so like I said, if it was in a pattern form, you would understand it a bit better. However, it's not in a pattern form. I just mark out my last low and my last high. Then I would wait for either one of them to get taken, and then I will look for a position from there. Right, so let's play it out to see if we can get a liquidity on either side taken. Okay, so there, as you can see, price went ahead and took out the high liquidity. Right, so like I said, liquidity taken becomes X, liquidity below becomes S. Right, so this still remains my high and this still remains my low. Reason for being is that this is all internal moves. It's all within the last low and within the last high. So I'm going to wait for a bit more confirmation before I look for any positions. So once again, liquidity taken becomes X and liquidity below or above becomes S. Right, so I hope that's easy to understand. So let us see how we can use liquidity in our favor to look for high probability setups. So at this point in time, let me just show you how I would look for a position if I was to look at liquidity taken. So sometimes it might not always take the liquidity at the bottom. So what I'm going to do is mark out this low. And I'm going to mark out this low over here. And you will see once price takes or has taken either side of liquidity, price will either pull back into this level then continue to the upside, or it will drop to the downside, come back into the level that caused the break of structure or the change of character, then continue back down to the downside, right? So for now, this is just an example. I'm not taking anything. I'm just showing you that prices can either drop into this level or to this level over here. And then that will be a trade to the upside, right? So let's see. Either price can break the high above before it comes back, or it can come back before then. So here's something interesting as well, right? So liquidity is basically any point in the market in which price failed to move with momentum, right? So here's momentum over here, here's momentum over here, then over here you get no momentum. And if you look slightly to the right, you have momentum over here, and if you look over here, you have no momentum, right? So this becomes liquidity as well. Like I said, any point in the market in which price don't move or fails to move with momentum, that is where you will find liquidity, right? So most liquidity, this is the most easiest liquidity that you can identify and the most highest probability that you can identify. And a bit later, maybe in another video, I will talk about how to identify different kinds of liquidity. For now, I'm just going to keep it at the highest probability liquidity. That's easy for you to understand. And then as you can see over here as well, if I was trading myself, I would have said this is liquidity taken as well. But because I am showing you high probability liquidity, I'm just going to call this a change of character, because it's my very first break of structure into a bullish momentum, right? So this still remains a low, that still remains a high. However, now price has changed character to the upside, taken out the previous high, which is this over here, taken out the previous high, causing a change of character. So at this point in time, what we can do is we can use the Fibonacci either from the low or this over here. So let's start off by using it from here, pull it to the high over there. So as you can see, price is. There's a bit of imbalance there. I'm not sure if I explained imbalance on the previous video, so I'm not going to explain it here. So there's a bit of imbalance there. It's in the yellow zone or the premium zone. The red zone is the 50% zone. So let's see if we can get price to drop into the yellow zone, and then we will look for a trade to the upside or to the bullish side. So as you can see, price went ahead and tapped into the yellow zone, and we call that a demand zone. And from here we either expect price to continue to the upside or drop into this high, so either to the upside, right, or we expect price to either come into the high here and then drop back down and then continue to the upside, right? So for now, the most basic thing or the most easiest thing that we are looking for is just a continuation to the upside after a drop into the yellow level, right? So also don't forget to mark out your liquidity taken, right? So liquidity taken becomes X, and liquidity above or below becomes S, right? So as liquidity taken at this point in time, I would look for a position to the upside targeting this high over here, or either targeting this high or targeting the high just above it, which is this one over here, right? So let's see if we can get what we are looking for, and there we have both take profits hit, right? So it's as easy as that, guys. I hope this was easy to understand. I hope I made it simple and easy for you guys to understand. Liquidity above becomes S, liquidity below is S, liquidity taken becomes X, right? So as you can see, liquidity below here has never been taken, so I'm going to leave that as S, and we are going to move on to the next liquidity taken or liquidity above, right? So at this point in time, this becomes X, but this is advanced liquidity. This is a bit of advanced liquidity. So what I'm going to do at this point in time, I'm just going to call this a minor or internal break of structure. I'm just going to call it a minor or internal break of structure. I'm going to mark out a level within here. I'm going to mark out this level, and then I am going to look for another position to the upside, either taking out the previous high or a continuation to the upside. However, this is not interesting me. I'm not interested in taking a position from here because of what is happening over here. So let's see what happens. There we go. So like I said, target the previous high, takes out the previous high, and then continues to the upside, right? So let's remove everything, and we can move on to a different setup. Yes, I'm going to leave everything here. Going to leave everything here. Let me remove this. Let me remove the internal liquidity as well. And we are just going to work with the trend. Like I said, our highs got taken, so we're just working with the trend right now. So there we have bullish momentum, break of structure. So we're hoping from there and then continue to the upside. So let me leave this over here. Now we are going to work with highs and lows again. So let me mark out my high. So let me mark out my high. And then I am going to mark out my low as well. Alright guys, so I hope I'm making this easy for you guys to understand. I hope this is as easy. I hope it's as easy as a break of structure and a change of character. I've explained break of structure and changes of character. So let's see. Okay, so there we have another break of structure to the upside. Let's mark out the break of structure. And then maybe move this over here. And now let's look for some more liquidity where we can take our setups from. You can see we have a pullback into the low. Broke our structure on the top there. We have a high that got broken. So if you watch the previous video, you will see I explained to you how to use a break of structure or a change of character, and from here we either expect price to continue to the upside, breaking the previous high as well, or once again we're either looking for some liquidity and then a drop into the level. However, it's already dropped into the level, so we're not really looking for anything at here. Either we're just looking for position to the upside. So from here, stop loss below the previous low and a position to the upside, and then right, so break a structure, drop into the previous level. As you can see, there's some liquidity forming over here. Alright guys, so liquidity that has to form is the most easiest thing that you will ever see in the market. It's easy to identify, or at least high probability liquidity is easy to identify. And maybe later at a later stage I'll dive a bit more into depth about the different kinds of liquidity there is. For now, this is the high probability liquidity. So let's see which one gets taken first. Alright, so I would say, okay, let it finish. Let's let the liquidity run out. Okay, so let's let the liquidity run out. My tongue. And then let ourselves find us a trade or a position that we would like to open from, right? So let's see what happens here. Right, so liquidity taken becomes X. Liquidity below or above that hasn't been taken stays S. Right, and there we have another grab to the downside. So this becomes very, very high probability if it takes out the low and the high. So as you can see over here, price first took out the liquidity above, and now it's taking out liquidity below. Right, so this indicates to me one of two things, that the trend that's about to occur is going to be a very high probability trend or a very high probability trade. So at this point in time, what I would do is use my Fibonacci, pull it to the low that I've marked out and to the latest high. Right, so let me mark out the high as well. Let's see. Let's mark out the high as well. So it's low and high. So at this point in time, I will go and mark out a Fibonacci 50% zone, premium zone. So anywhere within this level, I would look for a position to the upside, stop loss below the previous low. So because price took out the previous high and the previous low as well, I would let my risk be a bit more than what I usually do because of what is happening currently. So let me just show you guys what I'm talking about. So this would be a stop loss. My stop loss would be a bit bigger than what I normally do, and I would target this high for my take profit 1, and then the second high over there for my take profit 2. And the only reason why I'm saying that is because price is taking out both sides of liquidity. So let's see if we can get the trade that I am looking at. Right, so stop loss below the previous low. This is all liquidity within this level. Right, so this is how I'm looking at it. That's all liquidity. Price can grab all the liquidity and then we are good to go. And so I hope I'm making this video easy for you guys to understand. I hope it's not too hard and you guys understand what I'm saying. Alright, so let me just pull this across some more. So I've basically taken a position from here. My stop loss is below the previous low. I always encourage you guys to do that. Always put the stop losses below the previous low because of things like this. So I have a lot of faith in my strategy. I believe in what I've learned. This would be my take profit 1, stop loss below the previous low. And this over here is what I call a demand zone. Don't worry guys, I'll remove most of this now. This is just to show you that what high probability setups look like and what high probability setups does. Alright, so once again, I hope this is easy to understand. Alright, so it's causing a lot of panic in here. There we go. We're getting somewhere over here now. Okay, it's almost take profit. Hey guys, so what I want you to look at as well is if you look at what's happening over here, and over here as well, right? So this is, if you look at the higher time frame, this would be liquidity on the higher time frame as well, right? So do not just stick to one time frame. I encourage you to take a look at all the time frames when you are looking for a setup, just so you can identify liquidity on all time frames and what price looks like on all time frames, right? So like I said, this is liquidity on a higher time frame, so don't be fooled by the move. This is liquidity on a higher time frame. However, we have taken this trade based off what we saw happen over here. Liquidity got taken above and liquidity got taken below. So I've taken this based off of liquidity or the high probability setup I've seen on the left side over here. And now I'm going to let it run to, oh, I have not seen that. So as you can see, in between this space over here, market closed over here, market closed over here, right? So market closed. Let's see if we can fill this imbalance. Right, so that is imbalance, a price where market needs to come full, right? So what we are looking for is something like this, closing up this space over here and then continuing to the upside, right? So let's see if we can fill our imbalance. Right, so I would guess at this point in time that the TP or the take profit's been hit. Right, both take profits has been hit. Right, so as you can see over here, both take profits has been hit. So that is what a high probability setup looks like, right? So I hope I am making everything easy to understand for you guys. So let me just remove all the unnecessary drawings and markouts that I've made over here. Okay, so let me leave that one. Let me leave the imbalance in there for now. We need that space to get filled before we are looking for any new positions. Right, and let me remove the DMZ, since this is just a liquidity. This is just about liquidity, so I'm going to consider this a break of structure for now until our imbalance still gets mitigated, and I'm going to shift my low to the new low that price has made, and then I am going to look for a new high that we can mark out. Right, so there we have ourselves a new high, and we identify highs by where price turns around more than 3, 4, 5 candles. Right, so now we are looking for imbalance to get filled. Since we have a break of structure over here, I'm going to use my Fibonacci to identify a zone in which we are looking for price to pull back into. Right, so because there's imbalance over here, I'm still going to use this as a point of interest. Right, so let me mark out as a point of interest. So because there's imbalance over here, I'm still going to mark out my point of interest, which is this over here. And then I'm going to mark out all the liquidity, which is the point in the market where price failed to have any momentum, like so. And then let me just use the Fibonacci one more time. And then I am going to mark out the entirety of the premium level. Right, so now what we expect is either price comes back, drops into the level and then continue, or drops into the premium level and then a continuation to the upside, depending on which move or which point it decides to move away from. Right, so let me just mark out my demand zone, which is in the premium level, and then imbalance, which is the point that we are looking for where price failed to mitigate or failed to close up before continuing to move into the upside. Right, so okay, so liquidity, let me just open up liquidity some more. Right, so let's see if we can get our prices mitigated or our imbalance fold before we start looking for a new position to the upside. Right, so as you can see, price has fold our level or fold the imbalance over here. Hope not fully, but it has fold imbalance. So at this point in time, I would look for another position, stop loss below. Let me see. I'm going to pull it from here. Okay, I think the stop loss should be good over here. Stop loss should be good over here. I'm not too sure. I would look for more confirmation before I would take this trade. However, I'm going to leave a stop loss here and just see if we can get this trade running. And let me just calculate this some more. Let me just do some more calculations over here. Oh, no. Let me use the opposite side. It's a low 50% zone. Okay, so I think the stop loss should be good over here. Let me just open it up some more. I'm just gonna open it up some more because of momentum. Momentum can be a very tricky thing. And then I'm going to target take profit number one. I'm going to target this highs over here as well, or this liquidity over here. Right, so let's see if we can get this trade to run. And don't forget to mark out your liquidity. Liquidity taken becomes X. Liquidity above becomes S, and liquidity below becomes S. So I'm going to remove this for now, just so you can see how it runs. And I'm going to increase the speed. So we're targeting this high for take profit. Okay, before we continue with that, let's just check if our stop loss got hit or if we are still good. I said I was going to open it some more and target the high at least for take profit one, and then this high over here for full take profit, right? Okay, so stop loss never got hit, and then something interesting happens over here, which is some more liquidity over here, some more liquidity below. Right, so this here as well, this is some more liquidity over here. Let me take it to here. Then there is some more liquidity above here. Right, so there's some more liquidity over there. Let's see if we can get another position from here. Okay, so somewhere in here is a most likely level of demand. Right, so liquidity above is liquidity below is liquidity taken becomes X, liquidity above becomes S. Right, so let's play it out. Okay, so our liquidity got taken, however it did not drop into our level, which is okay. Liquidity got taken above. Right, so once again, all points in the market where price fails to move with momentum is a point in the market where you would be able to find liquidity. Right, so I hope this video was easy for you to understand. I hope it was easy for you to understand. If you found this video helpful, drop a like and subscribe, and I will see you on the next one. Peace.